Hi, this is Brian Neal with TradeToBeFree.com. Today I want to show you the strategy that we use, strategy that's very, very easy to incorporate into your own routine. If you work full-time, you can use this strategy. If you want to make, 5, 10, 20, 30% or more on a trade instead of, 1% or a half a percent, and try to use a lot of margin, risky margin, to turn that into a good profit. If you want to trade less and make more, this is a really good video to watch because I'm going to show you how we do that here on the site. And today I'm looking at Kirkland Gold. This is a stock that we featured to customers earlier this month. And what you're seeing right here is a stock in an upward sloping channel. And this is one of our favorite swing trading plays. Okay, a stock that has a very consistent uptrend and uptrend support level. We can draw a line connecting the lows here. And to trade the strategy, what we do is we look for a confirmed downtrend resistance, and we do that by connecting the highs in this pullback here. Generally, you want to see it come back to the uptrend support, but sometimes it comes back to a key moving average. In this case, it looks like the 50-day moving average. And what you do is you'll wait for that short-term downtrend coming back to the uptrend support. Okay, this bottom channel line here. All right. Wait for the stock to come back towards here and then break out of this short-term downtrend. And it did that when we featured it. And what you do on the site is you just go ahead and you click the chart. The latest chart will come up. Sometimes during the day it's busy and it takes a little bit for the chart to render. Once the price goes above this price here, the prior day's high, that was the entry point. So if we go look at the chart and we look at the commentary underneath, we can see that the target entry point is a move above 45.65. Okay, so the high that day when I put this on the site was 45.61. So we want to see the price go above 45.61, actually 45.65, because we want to see the price go a little bit above the prior day's high to confirm the trend is going back higher. Okay, and right now we're in a market where we've seen a bearish market signal, and the market is sort of holding on to support level right now after an initial drop of 6-7%. Okay, it's trying to hold on to that. It may go further to the downside. We're in this more rocky market environment where gold tends to do better, will tend to do better, and these gold stocks are really in strong uptrends at this point. And on those, we trade them the same way. Okay, so it's just like another stock where you find these uptrending channels. Okay, and you find the downtrend going back to the uptrend support, and once that short-term downtrend breaks, that can be a good entry point as long as the fundamentals are still improving and the stock is not too overvalued. I mean, usually with these type of trends, the stock will become overvalued by some metrics, by some measures and ways of valuing stocks. But as long as that trend is still continuing, the price trend in the long term, okay, above this long-term uptrend support or above key moving averages, okay, and the fundamentals are still improving and the value of the stock is not too high, too high, this trend has a good chance of continuing to go north. And again, in this type of market environment where we're seeing the NASDAQ and the S&P 500 and most stocks pull back, and people are wondering what's going to happen with the 10-year Treasury yield and how far the yield curve will be inverted. These type of gold stocks and silver stocks sometimes go on a nice run like this, and we can catch these really good entry points and get out at 10, 15, 20% or more profit within a few weeks. And we went ahead and entered this a little above the prior day's high again. Once it hit the entry point, we jumped in and we took most of it off this morning at our target, which was a little below the target. Actually, we waited to see this morning to see if it would continue higher and just continue going above that target sell price, and it didn't do that, so we went ahead and took most of our profits up here around 50.70. And with these uptrending channels too, another nice thing about them is that you can keep a portion until this uptrend support breaks. So you can have multiple, confirmed downtrends here where the price breaks above those, all right? And then as you take profits on these spikes, you can keep part of your position, hold it until it closes below the long-term uptrend support. Because once it closes below the support level, the trend is likely to break and it's likely to at least go into a consolidation. If it's a penny stock, it'll likely go a lot lower. If it's a stock already above $20 and it's been above $20 for a while, and it's in this long-term uptrend, it'll tend to go into more of a consolidation if the stock has a rapidly improving fundamentals. And those are the stocks that we focus on the site on. And this is a gold stock with rising estimates that are beating those estimates. We want to, again, find the technical entry point in a rising channel where the fundamentals are improving quickly to support this higher price. And we were able to do that with Kirkland Gold. All right, so it's really simple. If you work full time, you put the buy stop order a little above the price that we mentioned in the alerts. Okay, and then after that, you can put a stop loss order, say below this low if you prefer. We wait until the price closes below this long-term uptrend support. We give it more room in that way. Very often, you can then put your limit order in for your target sell price along with that stop loss order if you want to use that, and go for that target profit. In this case, it was around 10% within just a few days. And with that limit order, you can sell a portion of your position and keep the rest again until the long-term uptrend support breaks to the downside. Okay, so that's a really good example of a rising channel and the typical swing trading opportunity we look for on stocks with rapidly improving fundamentals to support the higher price. All right, I want to show you another example here of Splunk. Okay, now Splunk just came out with earnings when we featured it, and we wanted to see the price go at least above that day's high after the earnings report. We don't want to see a stock gap lower on earnings and just jump in and assume it's going to come back and go through the entry point. We want to see a key level of resistance being broken. That's a little aggressive by playing it by jumping in when it goes above this prior day's high here. This is an explosive bottoming pattern. So it's a very bullish pattern that's developed here. It's also a symmetrical triangle pattern. Okay, so if during the day it can go ahead and get above that breakout point, great. If not, then we want to walk away. Okay, so it's important to understand the rules in the strategy. With Splunk, for instance, if we look at the chart now, we can see that how it gapped lower. And because it gapped lower, it didn't hit the entry point. We stayed away from this and just let it fall and consolidate. And then we'll watch this as time goes on. The earnings report wasn't that bad really, but we'll watch this over time and see if it develops another bullish pattern. It might develop a 1, 2, 3 trend change to the upside. It might develop a double bottom pattern. It might even do that on a weekly chart, which is even better. Continue to watch that, and we just avoided the trade because it didn't hit the entry point. Another good example of that type of entry point is with ServiceNow. ServiceNow was featured early this year. I think it's up like 50% or so this year so far. But we saw it early this year in this pattern here. This may actually be an explosive bottoming pattern too. Let me just go take a look here when we featured it back in January. And yeah, that was right here. So if we can look down here and see, yeah, it's close to it, not quite. I mean, it is a 1, 2, 3 trend change back to the upside. We've got that rising 200-day moving average still, even after the large correction. Okay, but the entry point, more conservative entry point was a move above, I think it was 194.50, around there, 194.20, 30, something like that. That didn't occur until late January. Okay, and it happened to occur too with a catalyst, which is great. Okay, they had a big earnings beat on both the top and bottom line. I think this also hit all the rules in our earnings eruption strategy. So if you're playing that with the course and the site, you could have used those rules to jump in on this. But if you're just looking for the trigger point, that move above 194.50 was the entry point. Yeah, 194.25. Okay, so we definitely want to see the price hit the entry point on our trades. In some cases, if the price closes above a short-term downtrend resistance, okay, we can sometimes just go ahead and jump in at the open the next day. That's fine too. Oftentimes, I just want to see a little more price confirmation. So the price moving above the prior day's high the day after the price closes above this short-term downtrend resistance, okay? So a little more price confirmation. especially in a more choppy market. Okay, but it's real straightforward. You wait for that entry point. You get your limit order in there for your target sell price to take profits. You can go ahead and put a stop loss order in there with that if you like. If it's a momentum trade, such as a high tight flag breakout or a flat base breakout or a rounding bottom that's really shooting up. If it's more of a momentum type trade, then we'll go ahead and wait for, definitely wait for the price confirmation, but also put a stop loss order in there right away in case it goes against us. Because if they do turn over and come back the other way, they can come back quite a bit. They generally hold up really well, surprisingly enough. High tight flags and also other top momentum plays generally hold up really well on top stocks. If you trade penny stocks or stocks below $20, that won't be the case. But generally, in this higher price range on top stocks will hold up better. We still put a stop loss order generally, or watch it closely with an alert with our broker. So that's another thing you can do is put an alert with your broker to have them text you once the price moves below a certain point, and then you can look at it at that point and see if there's any real news to force the price lower. If there's not, then you can maybe choose to give it some more room or not, or just pull the plug on the trade. Okay, so it seems like every trade this month, the ones that have hit the entry point have made a nice move, or are starting to, and the ones that haven't, and that's a way of getting a higher win rate. If you wait for that entry point to be reached, you generally have a higher win rate. You give up a little bit of the profits, but you have a lot better win rate, and that reduces drawdown and can really help in your trading over time. So, all right, guys, that's about it for now. Again, if you want the special deal we're running right now for the 3 months of the daily alert, you can go to our site. There's a special on there right now. Just click the special link, the menu option at the top there, and you'll get a special deal on the quarterly daily alert subscription. You'll get 5 of these trading opportunities setting up each week, and with our targets in there, and a lot of great commentary, market forecasts, and analysis, and a lot of really valuable information to help you in your swing trading.